Karame mushumbura inyango tubahe impundure barambe mu Rwanda murukaruka murukanga ntwariwe jeberwa n'inganjure ngabike ntarambe mu Rwanda cyagatinyirwe cyose ntwariwe maze abafozi nahusha umwanzi narambe mu Rwanda karame nanone karame mushumbura inyango ngo tubahe impundure barambe mu Rwanda nyir'umuheto w'abandi ntwariwe uretse n'ubuhangarahangara narambe mu Rwanda ntarirwa amahina tumuhe impundu ntwariwe ingamba nta cyuma yacyuye inganje narambe mu Rwanda karame nanone karame mushumbura inyango ngo tubahe impundure barambe mu Rwanda shengera usheje umushirabwoba ntwariwe shangura ababishashema ry'u Rwanda narambe mu Rwanda aciye mu Rwanda
Good morning, ladies and gentlemen. This is to let you know that due to a challenge of space outside, we are giving ourselves around 5 to 10 minutes, and then we'll be starting after 5 to 10 minutes so that we can allow those coming in to get here in time. Thank you.
mu nanone karame mushumbura inyangabo ngo tubahe impundure barambe mu Rwanda. Karame nanone karame mushumbura inyangabo ngo tubahe impundure barambe mu Rwanda. Karuka mukanga mpariwe tuberwa n'inganjo n'ingabike ntarambe mu Rwanda. Mari icyagatinyirwe cyose mpariwe maze abafosi ntahusha umwanzi ntarambe mu Rwanda. Karame nanone karame mushumbura inyangabo ngo tubahe impundure barambe mu Rwanda. Nyir'umuheto waraniye mbariwe uretse n'ubuhangara narambe mu Rwanda. Narirwa amahina tumuha impundu mbariwe impamba na cyuma yacyuye inganje narambe mu Rwanda. Karame nanone karame mushumbura inyangabo ngo tubahe impundure barambe mu Rwanda. Shengera usheje umushirabwoba ntwariwe shengura ababisha shema ry'u Rwanda n'abarambe mu Rwanda. Yaciye mu Rwanda zantavumere ntwariwe ababyeyi basubiza ingobyi mu bwobo ntarambe mu Rwanda. Karame nanone karame mushumbura inyangabo ngo tubahe impundure barambe mu Rwanda. amakenga y'amakenga mu Rwanda arambe mu Rwanda ndarame nanone nkarame mushumbura inyambo tubahe impundu we barambe mu Rwanda.
Honourable Governor of the National Bank of Rwanda, Honourable Deputy Governor of the National Bank of Rwanda, members of the Senate present, Honourable Ministers with us today, members of Parliament, heads of banks, development partners, distinguished ladies and gentlemen, all protocol observed. Welcome to the presentation of the Monetary Policy and Financial Stability Statement by the National Bank of Rwanda. I'm Samuel Baker, an economist in monetary policy and research at the National Bank of Rwanda, and I'm pleased to be your host for today. As per today's agenda, we'll start with the Governor's presentation of the Monetary Policy and Financial Stability Statement, followed by an open discussion, a cocktail, and later a press conference. Distinguished guests, the presentation of the Monetary Policy and Financial Stability Statement is an important and priority occasion in the annual calendar of events for the National Bank of Rwanda. It is consistent with the key governance imperatives of transparency and accountability in the formulation and implementation of monetary policy in Rwanda. The statement seeks to promote an understanding of the conduct of monetary policy and its objectives, and accordingly guide the public's formation of expectations. The National Bank of Rwanda has a mandate of maintaining price stability and a sound financial system, and in pursuing these objectives, the bank implements monetary policy in a sustainable, consistent, and transparent manner. It has regard for the efficiency and soundness of the financial system and seeks to avoid unnecessary instability in output, interest rates, and the exchange rate. It is on this occasion that the National Bank of Rwanda reports on developments of such key economic indicators and policy performance, as well as outline and convey the bank's perspective on the overall economic outlook of the country. In this regard, ladies and gentlemen, I'd like to welcome the Governor of the National Bank of Rwanda for his presentation. Honourable Governor, you're welcome.
Thank you, Samuel. Honourable ministers are here present, members of our parliament, other government officials, CEOs of financial institutions and other industries. Let me start by thanking you for honoring our invitation to this Monetary Policy and Financial Stability Statement. As we've become used to this. We present this twice a year, and we, as someone has just said, it's really to inform you and through the media, the public in general, on the status of our economy, but focusing mainly on our main mandate of price stability and financial stability. So this is the outline of my presentation. I'll try to be brief today. We've tried to put a lot of details in this booklet. It has a lot of information, and we've tried to make the presentation slightly shorter than usual. And I would invite you to, after this, to really read the detailed material in this booklet that will help you to understand the status of our economy from last year and so far the preliminary projections for 2018. I call it preliminary because this is projection that we have done in October. So we are waiting for the final performance numbers of the economy from the Institute of Statistics showing how 2017 performed. Then from there we shall come up with new projections for this year. So I don't know whether to change a lot from what we are able to see today from the projections of last year. So as usual, we start with the global economic environment, putting into context what we do here as a country, because we are affected and we are linked to the global economy, though not deeply linked, but we are, and what happens globally affects our economic performance. Then we'll focus on the national economic performance itself, the policy stance, which is our main mandate as the central bank. Then we look at the financial stability, looking at the financial sector in general, and then what we see going forward. So on the global outlook, I think there are three main stories coming out. We have about 3 or 4 slides here. Mainly one looking at the economic performance in general, the global economic performance. Then the performance or the behavior of the commodity prices, because that directly affects us. And the inflation in general globally, and how that is affecting the monetary policies of the central banks of different countries across the globe. So when you look at this graph, it shows that since 2016, global economy started picking up from the decline it had over several years. And the interesting thing is that last year we had much better performance than 2016. That is on the global level. You can see the breakdown in different regions. But global, as you can see, the economy grew by 3.7% last year, and it's projected to grow by 3.9%. And this is mainly linked to rising global demand and favorable financial conditions. But for the sub-Saharan Africa, that is important to us. You see the worst performance we had of 1.4 in 2016. Last year we did better at 2.7, and we expect to do even much better this year at 3.3%. So this gives us the global picture of how the economy is expected to perform. Here we are looking at ESC as our neighborhood and our main trading partner. As you can see, all the ESC countries had slightly lower growth last year than 2016, except I think Uganda, that was picking up from a really bad performance in 2015. Burundi is an outlier. They had their own issues, and therefore the economy remains with big challenges. Again, as you can see, this year we expect to perform much better than last year. So this gives us, for Rwanda, we project a performance of 6.5%. Similar to Kenya, expected to perform 5.5 from 5, and then Tanzania expected to go back to 6.8. I think Tanzania has been the highest, above 7. Last year was not good for them. I think they had we all had issues of weather conditions that affected our performance in general. But I think as I will give the details concerning Rwanda, we will see better climatic conditions this year that will impact positively on our economic performance in general. So this gives the prices, as I said, this is of much interest to us because our main exports are commodities, and therefore the behavior of commodity prices affects our export earnings. But also interested in energy prices because we are a net importer of energy products, and so depending on how it behaves, that affects our performance as well. So, but as you can see here, there's good positive trend in commodity prices that is sort of flattening between 17 and 18, but remaining much higher than 15 and 16. So this it will impact positively on our exports. It had very good impact in our exports last year, and we expect that to continue during the course of this year. While energy prices are expected to continue to increase, I think sort of remaining also stable this year, it has already had an impact on our transport prices or pulp fuel prices, but it's not big enough to offset the benefits we are getting from the increase in our mineral and agricultural exports. I think this, as I said, this is the behavior of inflation globally, and so it remains lower than most of the targets of the developed countries' central banks. And therefore, maybe apart from the US that has started tightening, most of the other developed countries are expected to remain highly accommodative, even though the US is also tightening, but it is still really accommodative. And therefore, this shows that there's still big room for financing at the global level. On the ESC level, we've seen inflation going down by the end of this year. As you know, 2016 had gone up because of the challenges with the food production, and we saw that even in Rwanda. 2016, the beginning of 2017, inflation was high, but all the ESC countries, we see inflation coming down in towards the end of 2017 and 2018. Except for Burundi, of course, as I said, they have their own challenges. Now, focusing on the national performance, I think starting with the Rio sector, we had seen a downward trend from end 2015. The quarterly, as you can see, the graph, unfortunately, I'm not able to project to the different graphs, but I mean to the different slides, but the graph on the top corner of the left side of the slide shows performance going down from 8.9 in the fourth quarter of 2015 to 1.7 in the first quarter of 2017, and that was, I think, the lowest we could go. So good to note that since second quarter of last year, we started seeing the economy picking up, mainly due to improved performance in agriculture, and some other projects, construction projects coming on board. I think the big, as you see in the booklet, the big challenge we had in the poor performance of the economy was the conclusion of the different construction projects and industry. I think the first quarter of last year grew by negative and that is because of the construction projects that we had, big construction projects that were concluded. But as we see more projects coming on board, and as we see agriculture doing well since the second half of this year, as you can see, we had 4% performance second quarter and 8% performance in the third quarter. So when you look at the numbers we track as a central bank on the right-hand side of the slide, there's what we call the composite index of economic activities that gives us sort of an indication of where we expect the economy to be heading, though we are waiting for the final numbers from the Institute of Statistics. At least what these numbers show us is that the fourth quarter is also expected to perform much better than the fourth quarter of 2015. 16. So we see the CIA growing in real terms by 16.4% in fourth quarter compared to 6.5% in the fourth quarter of 2016. But again, what we see is that overall, annually, the CIA performance for 2017 is lower than the CIA performance of 2016. Therefore, as already projected by the Minister of Finance, we don't expect to achieve the 5.9, or we expect to be below than the 5.9 performance we had in 2016. I think the projection was a growth of around 5.2%. But so far the numbers we have here indicate that we will achieve, most likely achieve the 5.2% and maybe surpass it as well. But at least this shows us that fourth quarter will also continue to perform well. Now going on the international trade, I think that most of you have had these numbers already from the Minister of Finance, and as we see, we had very good performance in our external trade. Exports growing by 57.6%, imports growing by negative 0.4%. So I'll give details of the story behind this, the performance of both the imports and exports, and this really impacted or improved our trade balance by 21.7%, though we still have a big gap in the trade balance of $1.27 billion, but that's coming down from a high of $1.6 billion in 2016. So when we look at the exports, we have three categories of exports. There's what we call the traditional exports, that's minerals, coffee, tea, and pyrethrum mainly. Then the non-traditional exports, here we are happy that now we see industrial products being exported to the region from Rwanda, and that is mainly milling products and cement and some textiles. So that has improved our performance in exports. So the good performance in exports is linked to two main factors. One is the good performance in commodity prices that improved or increased our traditional exports. And as you can see in the details in your booklet, it shows the performance per each of these categories of exports. But we saw good growth in all categories, in the traditional, non-traditional, and re-exports. So the non-traditional, as I said, this is where we see maybe the impact of made in Rwanda, because we start seeing exports of industrial products from our country to the region. And in fact, with some of the garments, it's exported even beyond the region. The other good story, I think we showed this in our last MPFS. I think it's the factor of diversification of exports is real and clear on this graph. When you look at 2008, the traditional exports, the minerals, tea, coffee, pyrethrum was 67% of our total exports. And that has gone down to 30% today. So that is really important, because as we always say, we are hit by commodity prices globally, and so the fact that our mix of exports, these traditional exports, have reduced as a share of the total exports, I think that's a good development that we need to maintain if we are to reduce the vulnerabilities we see linked to the performance of global commodity prices. So there's good improvement in non-traditional exports. That was I think at 12% in 2008. Even when you come to 2013, we are just at 14%, and that has grown to 38.9%. And then the re-exports are dominated by petroleum products. As we build more capacity, storage capacities of petroleum products in our country, so we're able to re-export more, and that improves on our balance of payments. Now, on imports, as I said, we saw slight decline in imports, and this was mainly coming from capital goods linked to the constructions we had in 2016. There was import of machinery linked to the big hotels, so that had an impact on the overall performance of the capital goods imports, and that, in fact, is the one that affected the exports in general. Otherwise, the other two, the intermediate exports, intermediate goods, and the consumer goods both increased. I think that the decline was mainly on the capital goods imports. This also shows the share of capital goods, and I think the biggest share of our imports still remains consumer products, and this is mainly still import a lot of food, and that is in form of sugar and cereals. We've seen good reduction in import of cement because of the increased production of Simera, though we are still far from the 2016, and favorable other conditions like, as I said, the inflation started easing in second half of 2017. Last year we had less exchange rate pressures, so the Monetary Policy Committee was able to take decision to ease our monetary policy stance. Starting from, in fact, December 2016, we had reduced it to 6.5. Then in June, we reduced it to 6.25. I mean, 6 to 6.25 in December. Then later reduced it to 6 in June, and by end of last year, we reduced it to 5.5%. And as a result of this, but also linked to other factors, the good performance in agriculture and the other factors, we saw improvement in monetary aggregates and a decline in interest rates of the money market interest rates, as we'll see on the next slides. So the graph on the left-hand side shows the performance of the credit to the private sector. At least we see this, and that is our main objective when we reduce the key repo rate, or the central bank policy rate. We normally want to encourage financial institutions to lend more, because this was linked to the poor performance we're seeing in the economy in general. And we are happy to note that overall outstanding credit increased by 13.9% last year, compared to 9.1% that was achieved in 2016. We also saw M3, which is money increasing by 12.3% compared to 7.6%. So we can say the objective of the Monetary Policy Committee here was really achieved, to see increased lending to the private sector and increased activity on in the financial sector. Again, as you see on the graph on the right-hand side, we see deposits increasing by 12.4% compared to 8.2% that was achieved in 2016. So this graph summarizes what we normally track as the central bank, our interest. When we take a policy decision, we will always want to impact on these factors. This graph, which is very important, I will come back to what it means to us towards the end of this presentation, is we can see that the money market rates are now sort of following the central bank policy rates, though it's not really fully harmonized as we would want, because we still have weak financial markets, so the transmission mechanism is not yet that strong. But normally when we issue, or when we decide on a policy rate, we would want to see the interbank rate following the decision of the central bank. That's going forward, that will be our main target. And we look at this graph from 2016, we see most of the money market rates following the central bank rate, especially the interbank rate that normally is supposed to indicate how the financial or how the market is following the decisions or the intentions of the central bank. So this graph really has given us confidence and comfort that we can improve on our monetary policy framework. As I said, I would have it in my concluding remarks, but I can say it's based on this graph we have here. So we want to move from an monetary aggregate based monetary policy to interest rate based monetary policy. So going forward, if all goes well, by the end of this year, we'll move to a more forward-looking monetary policy, targeting the interest rates using the central bank policy rates. So this graph really gives us confidence that we are mature enough and we are ready to move. The graph, the slide here just shows the performance of the interbank transactions that has been improving, and as we see 16 and 17, there's good performance on good activity on the interbank market, and so this helps us and feeds into what I was saying, central bank being able to influence or impact on this, and at the end of the day, we hope to have an impact on the lending. And maybe I should have said this, while we've successfully impacted on the money market rates, there's still a challenge with the deposit rate and lending rates, but we still see positive trends there. It's been stable for almost maybe 10 years now, around 17%. So the slight reduction we see from 17.29 last year, 2016, to 17.19 as a lending rate is maybe a sign that things would start moving also following the central bank decisions. In fact, the first quarter of this year, we see even more good news in terms of the lending and the deposit rates trying to follow the policy decisions of the central bank. But there are many other factors that influence this, but the good thing also is that inflation is low, and therefore we continue working with the banks on the other factors that influence the interest rates they charge or they pay for deposits. Yeah, this was on the financial markets, still trying to build the case of how our financial markets are developing. I think since 2014, the government, Minister of Finance, through the central bank, decided to be issuing a government bond on a quarterly basis, and that has helped to increase the activity on our capital markets. And so the good thing to note here is the originate was dominated by banks, and as the graph there, the bars show, we've seen non-bank financial institutions taking the lion's share since 2015. And interestingly, individual investors are also coming up. So the average there is 5.8 for 2017. But I think in the last issuances of February and in November last year, we've seen individuals taking up about 12% of the total issued debt. So that is good that we see more people understanding. So there's been a lot of campaigns to bring more people on board to understand the benefits of working with the capital markets. This is not really aimed at just as a source of government financing, but we want to develop this as an alternative source of financing to the private sector, apart from the commercial banks that we have today that predominantly do all the financing. But as we see more products on the capital market, we expect this to be a good channel for financing the development of our economy, but also helping us in developing our transmission mechanism, transmitting the policy decisions of the central bank. On inflation, of course, at the end of the day, whatever we do, this is our main objective. Our main objective is economic stability, and this is measured by inflation. Though at times there are many factors that we don't control, especially agriculture performance, but at least we always try to avoid any second-round effects coming from any shock from agriculture or normally from energy that will impact on the core inflation. So as I had said earlier, last year we had a bit of pressure at end 16, beginning of 2017, and that climaxed at 8.2% in February last year. Then we started seeing that going down. In fact, in the second half of the year, because of the good agricultural performance, thanks to good efforts from the ministry responsible for agriculture and the other, the farmers, but also mainly thanks to the good weather conditions, we're able to see good performance in agriculture that had a very positive impact on inflation. In fact, by the end of the year, this had gone to below 1%, and January we I think at around 1.4%. So this one gives us room to maneuver in our monetary policy to allow more financing to the private sector, and allows also investments to blossom, because inflation is a threat to any kind of investment. So we're happy that today our inflation is really under control, and as we indicate towards the end, we don't expect this to be any big problem during the course of this year. The other point to note is the depreciation of the Rwandan franc. As going back to our table on international trade, we still have a very big trade deficit, and automatically that impacts on our exchange market. But last year, as we had good performance on our exports and negative growth in imports, it gave the market room or it allowed less depreciation of the franc, because we didn't have any big pressures on the exchange market. In fact, almost throughout the year, we had stable conditions on the foreign exchange market. The slight depreciation is inevitable, because we're really managing a current account deficit, so that there's no way we can avoid the depreciation. But anything around 3% or below 5% is, I'll say it's normal, it's healthy, it won't affect businesses as such. Now, going to the financial stability, the main other key mandate of the central bank, I think there's also a lot of details in the booklet on the financial stability, but I'll just give a few slides here to stress the main points that we maybe want to highlight here. This slide shows that the financial stability is linked to the performance of the economy in general. So it's interesting that they impact on the positive performance, because it gives financing to the private sector. But when the economic conditions are not good, of course it impacts on the financial sector as well, because demand for loans are not good, quality of loans are affected. So as you see on this graph, there's a big discrepancy or difference between the first half of last year and second half of last year. First half of last year, we had really bad economic conditions. As you saw, 1.7% growth in the first quarter, 4% growth in the second quarter, high inflation in the first months. Then we see good performance in the second half of the year, and this is really reflected in the performance of the financial sector, where you see mainly in the growth of the new authorized loans, negative growth in the first half of the year, and very good growth in the second half of the year. Then loan applications, as I said, this will impact on, at the end of the day, on the new loans. I think we had just 3% growth in loan applications in first half compared to 33% in second half. NPLs of banks in the first half, it had gone to 8.2, that is in June, and this went down to 7.6% by the end of the year. So this really gives the good link between the financial sector and the economy in general. And so as we expect to see the good performance realized in the second half of last year continue this year, so we also expect to see maybe good or better performance from the financial sector. So this gives normally the performance of the banking and microfinance institutions, overall we see the assets of the banks growing by 12.9% in 2017, better than what we had achieved in 2016 of 11.6. And as you see in your booklets, the big part of these assets is loans to the private sector, and I think it's maybe in the next slides. Then we see also the microfinance institutions, the assets growing by 9.7% compared to 6.6%. So the good performance in the second half of 2017 helped the financial institutions to improve on their balance sheets. As I said, the faster growth in the assets was really impacted or driven by the performance of the deposits, good improvement in deposits from the private sector. So we see that growing by 13% compared to 8% achieved in 2016. That is on the banking side, and in nominal terms, that's growing to about 1.7 trillion. The same with the microfinance institutions. We had seen really small growth in 2016 of 2.4, and this was, in fact, negative 2.4, and that grew to 8.5 in last year. And as you can see, the main source of financing of our financial institutions is really the deposits from mainly the private sector, accounting for 77.4% of the bank liabilities and 79.2% of microfinance institutions. So how we are able to mobilize more deposits, the more muscles the financial institutions will have to continue financing the growth of the economy. This shows on the capitalization, because at the end of the day we follow the stability of the banks is really informed by how well capitalized they are. And so as we see here, there's good capitalization in all the financial institutions, and we had more capital injected last year, one linked to the increasing volume of business they are undertaking, but also linked to the deteriorating loan book that had shown that had gone to 8%. That put a stress on some of the financial institutions, and they had to inject more capital. But this gives us comfort today that none of our financial institutions has any threat of going under. They are all really strong and stable based on the capital base they are sitting on. As I had said, the main assets of the financial institutions is really lending, credit to the private sector. As you can see, banks account for 58.8% of the total assets of the banks and 54.1% of the total assets of microfinance institutions. While this is good, shows they are lending and they're financing development, but it also remains a challenge that it's their main source of revenue, and therefore part of the sticky high interest rates are linked to this, that it's really their main source of revenue, and therefore they have to depend on this mainly for the survival of their business. As I had said earlier, our concern last year, I think we had indicated this even in our last monetary policy and financial stability statement, was on the deterioration of the quality of the loans that climaxed at 8.2% in June last year for banks and 12.3% for microfinance institutions. So we see this improving by the end of the year, and it was mainly due to the three factors indicated there. Improved economic performance in the second half of the year. Therefore, some of their borrowers that had challenges were able now to start servicing their loans normally. But we had some banks had to write off some of the bad loans, and of course that improves the quality of the balance sheet, though it's not money recovered as such. But what's important is that would have impacted on the capital base, and as we showed, there was injection of capital. So despite that, we still see a healthy financial institutions based on their capital base and the performance in general. I think what we showing here is the performance per sector, which sector deteriorated further in terms of the NPLs. I don't have to go into the details. You have it in the booklet. But I think what was more noticeable here is on the manufacturing, growing from 9.4% as their NPL to 13.9%, and this was mainly due to about two factors that impacted the overall quality of the manufacturing portfolio, and I think the other is on trade, and these are like a trade has a big component in overall volume of loans given to the private sector, so its deterioration impacts on the overall deterioration of the financial sector. So as we engage with the banks, or even they themselves engage in managing their affairs, I think this breakdown helps to know which sector has challenges and then need to investigate further before they increase in lending to that sector. I think I've already talked about the capital increase, and so this measures the what we call the capital adequacy ratio, that it shows the stability of the banks, and the minimum that would never allow any bank to go below, even microfinance institutions, 15% of their capital adequacy ratio. That's the capital they hold compared to the risk assets that they have. So we are standing at 21% in banks and at 35.8% in microfinance institutions. So this is what we best want to say that they are really stable. Then on the liquidity side, that determines their capacity to continue financing the private sector. We see healthy liquid numbers from the banks at 43.7%. The minimum they would want to go below is 20%. So we said they are highly liquid and should be able to continue lending to the private sector. Same with microfinance institutions, in fact, more than liquid, because this is something that we've been discussing with the different authorities. Because they had issues with the NPLs, most of them have reduced on their lending, and they prefer to keep their resources at deposit in financial institutions, and that's why you see the liquidity of the microfinance institutions really very high. Again, what's important is how, at the end of the day, if the banks are not profitable or any financial institutions are not profitable, their business won't be sustainable. So here, because of the challenges we showed in the NPLs, it impacted on the overall profitability of the banks last year, and the same as microfinance institutions, because they had to do bigger provisions for non-performing loans. As you see down there, there was increase from 42 billion to 53 billion of provisions by banks, and from 3.2 to 7.5%. And this impacted, of course, on their profitability. But we are happy that they're still profitable in general, at 54 billion for the banks and at 3.5 billion for the microfinance institutions. On the insurance sector, I think here we wanted to show you the situation of the insurance sector over the last about 5 years. We've had challenges, and we've said this before here. We've seen the insurance sector, the private insurance sector, making and underwriting losses for really almost more than 5 years, in fact. And this has been a concern to the stability of the sector. But we've had the investors injecting more capital to sustain the business. But we're happy that finally, ASAL, the association, working together, they have agreed to try and stop the negative practices they've had over the past. and try to deal with the different challenges that is impacting on this business. As you can see on the other the other table showing the claims and expenses ratio, they are way above the benchmarks. Normally the expense ratio shouldn't go beyond 30%. You see where it is at, in fact, went to 60%, now going down to 48%, and the claims ratio is still high, and that has really greatly impacted the performance of the private insurance companies. And this is, yeah, I think this gives now I think this is for the motor vehicle. Yes, yes, motor insurance was the main driver of the negative performance, and it has the biggest share of the general insurance in our country. I think it's above 50% of the total premiums underwritten by the private insurance companies. So this table shows how, with the challenges they had, and of course, as you all had beginning of this year, they came up to try and improve on this performance, but was done in a way that created a lot of havoc in the market. And I think we expect that going forward they'll be better organized and be able to address issues as they come, and not wait for when they can't breathe and just throw out, and then it creates a lot of noise in the public. So the challenges we had at the beginning of this year was an adjustment that was supposed to be done in 2014, and instead of adjusting their prices, since then they went into price wars, and in fact even undercut what they were charging by then, and that completely affected the performance of the sector. So we hope with the new measures they're taking, and not only in the proper pricing, but there also been weakness in risk assessment. There have been high claims, and I think there's been fraud there. So we work with the industry to try and deal with these issues that have been negatively impacting on the private insurance sector. So as you can see here, despite the challenges, the investors continued improving on the capital. In fact, maybe you need to know that some of the investors had to be knocked out because of the bad performance, and new investors came in, and so, but the good thing is that we still had the companies capitalized. And so today, in fact, last year, for the last almost more than 2 years, for the first time we had the industry solvency rate above the minimum requirement of 100%. So, and we hope going forward, in fact, we've given notice to the insurance company that we won't allow any of them going below the minimum requirement anymore. So I think the fact that they agreed to put their house in order, I think that is good for everybody here. I think this is what I was saying, the first line there on the, it is for private insurers, yes. The first line there shows 2017. Okay, this is on annual basis, but I think when you look at 2016, the entire year and beginning of 2017, in fact, at some points were in negative solvency margins. But the good thing is that overall, as an industry, we've had good improvement, and the negative performances or the losses they have been incurring in the last 2 years, I think last year we are seeing them coming back to profitability, but that is mainly coming from non-core business, coming from investments, not the underwriting business. So what we want to see going forward is even the underwriting business itself being able to make profit. On the pension sector, we still have one pension player, the RSSB, and as you see the numbers, they performed well during the course of 2017. We've registered many private pension firms, so we expect that by the end of this year, we may start seeing them coming on board in terms of being able to report the numbers they are managing. But for now, it's still predominant RSSB, and I know everybody here is a client of RSSB, so I think we are happy that the numbers show that our pension funds are managed well and increasing year after year. On the payment systems, again, we have details here in this booklet showing the performance of the payment systems, how we're undertaking the non-cash means of payment. As we all know, we had a campaign towards the end of last year to try and encourage business people to use non-cash means of payment. So I won't go into details of how that has evolved. I want to just focus on the last part of this slide, where we show new products on the mobile money financial, with the mobile money financial services. We see micro savings increasing compared to last year. I think we had savings of about 2.9 billion, and this has grown to about 4.5 billion in 2016. There's micro lending linked to this micro savings, but the numbers are not yet strong enough, so we didn't have to bring it here. But at the end of the day, that's what we want to see. This, as the micro savings are increasing, we expect to see micro lending increasing as well. That's when it will have real impact on the lives of the population. So we also saw cross-border transactions increasing. I think we are linked to Uganda, Kenya, Tanzania, and in fact abroad. So this has also increased from 2.6 billion in 2016 to 3.4 in 2017. Then payment from person to government, I think this has the biggest growth because of the Rwanda Online and the RRA really digitizing all their payments. So as you can see, this has increased from 1.3 billion to 5.7 billion in just 1 year. And the big chunk of the taxes, in fact, are paid online, not through the mobile financial services. I think, if I'm not mistaken, we might say that maybe more than 90%, if not 100% of all taxes and fees paid to RRA are now paid using non-cash means. And going forward, in fact, the government objective that all payments to government will be done through non-cash means using digital financial services or bank services in general. So this just gives a global picture of how we are doing in terms of the electronic payments, digital payments. Our objective is to achieve at least 55% of our GDP, the electronic payments adding up to about 55% of our GDP by 2020. I think the growth trajectory is positive, is good. We are now at maybe 27%. And our main objective, in fact, we have this in our 7-year plan for the central bank, that we expect to see these numbers growing to 80% by 2024. So we are working. I know there's a lot being done by the banks and the telecom companies to drive products or to increase products that will attract people to use non-cash means of payment. So we have hope that the drive towards a cash-light Rwanda will be achieved sooner than later. So going to the conclusions, so we see going forward the global aggregate demand continues to improve. That will have a good impact on our exports and a good impact on, continued good impact on commodity prices. So we expect to see our exports continuing to grow positively, though we expect imports to pick up because of the big projects that have come up, like the Bugesera airport. But we expect to continue having a healthy, I don't know if I call it healthy, but at least more improved trade balance going forward. On inflation, again, when we look at the performance of agriculture in the first quarter of this year, I think season A of this year was good. I have happy that we have Honourable Minister of State for Agriculture here. I can confirm this. I think this season that we are ending was really good. So we hope going forward, depending on the efforts they're putting in, and so far the weather conditions look good. We expect, if season B goes well, we don't expect any big pressures on inflation. So we project this to remain below 5% during the course of the year. And therefore, because of that, it gives us room to maintain an accommodative monetary policy. As we see, the growth numbers are still really not high, so we can contribute to that by maintaining an accommodative monetary policy. And when I say accommodative, the rates will be determined by the Monetary Policy Committee that meets on a quarterly basis. And we expect this to have an impact on the credit to the private sector that we expect to grow by 13% and M3 to grow by 14%. And these are targets of toward the end of last year. As I said, maybe by the end of March, after we've got the performance of last year as the best, we'll see if it doesn't change anything going forward. I've said this before, I think we've really improved on our liquidity forecasting, and so we are shifting our monetary policy framework to a more forward-looking framework using interest rates as our operating targets instead of monetary aggregates. So we hope really to achieve this by the end of this year, and next year we shall be using interest rates instead of monetary aggregates as our monetary policy tools. On the financial sector, as I said, we expect this to continue growing because of the expected good performance of the economy. And this we expected also to impact on the quality of the portfolio in general. So we'll continue working with the private insurance. I've already said this. We see positive developments there, and we have to continue working with them to improve on the performance and really stop the negative performance we've been seeing there. And then, we'll continue improving on our legal and regulatory framework to ensure resilience of the financial sector. Maybe the other point to note here, as you know, there are a lot of changes happening in the financial sector today. The requirements, there's the Basel 2.3, there's the IFRS 9. We expect this to have some challenge or stress on the capital of the banks, but at the end of the day, the positive thing that it will make the banks more resilient, in fact, of the financial institutions. And so we are working with them to sail through this, but we expect that by the end of the year we'll be in a much more strong position as the financial sector in general. And then we'll continue really educating the public on the benefits of uptaking the e-payments, and we expect our drive towards achieving a cash-light Rwanda will be achieved going forward. So thank you. I had promised to be brief. I don't think I was very brief, but as I said, I invite you really to read the details in this booklet, because there's a lot of information, especially for the economic actors here. There's a lot of information here that can help you to make informed decision. Thank you very much for your kind attention.
Many thanks, Governor. We're now moving into the next phase for today, and that is the open discussion. Joining the Governor is the Deputy Governor, the Chief Economist, as well as the Executive Director for Financial Stability at the National Bank of Rwanda. Before we move into this phase, I'd like to have a few announcements to make. The first one is that all the documents, so the Monetary Policy and Financial Stability Statements booklet, as well as the Governor's PowerPoint presentations, available on the National Bank of Rwanda website under the link of publication. So if you want to access the presentation, you can have a copy from the website. The second announcement is we have forms on your seat, so if you're so kind to please tell us what you think by filling those forms. I'll now open up the discussion to the House, so if you have questions, we'll be reaching out and then you can ask the panelists. A few key takeaways, though, from the Governor's presentation. We've seen that the economic performance of the country has improved, considering the first half and the second half of 2017. It is expected to continue doing well. We've seen that the policy stance has been accommodative, but that is supported improvement in credit, as well as a resilient banking sector that has passed adequacy ratios, but still remains well capitalized. So, distinguished guests, this is the time where I reach out to each and every one of you with questions. Please, this is your time. So if there are any questions, you can raise your hand, we'll reach out to you, and then you can ask questions. Thank you. Or comments as well. So if you have any comments or questions, please, this is your time. Well, as you think about the questions you're going to ask with the comments, I'd like to kickstart this off with a question to the panel. The Governor mentioned that we are moving to a new framework, and you showed us a graph which shows money markets has been following changes in the central bank rate. How confident are you as the National Bank of Rwanda that we'll continue to see this relationship between the central bank rate and money market rates? Because if you're trying to target interest rates, then this relationship should work. Thanks so much.
Yeah, I think I've already said a lot on that. Let me invite the Chief Economist to add more to the interesting questions from someone.
Thank you, Governor. The link between central bank rate and money market rate means interbank rates, treasury bill rates, and the repo rates. Depends on two very important factors. The first one is the capacity of central bank to forecast liquidity in the economy. As presented by Governor, I think we have done very good progress in terms of improving the liquidity forecasting by our team. We have established an internal group, trained staff to be sure that we are working with different stakeholders and have information on a daily basis to help us to forecast liquidity in the economy. That's one. Second, we have developed a set of monetary policy instruments, and I think we have capacity now in the central bank about how to mix monetary policy instrument to keep relevant liquidity in the banking sector, which is in line with our objective. So, as said by Governor, we are really confident based on our capacity of forecasting liquidity, mixing different monetary policy instruments, but also engaging different stakeholders in the economy to that we have relevant information, particularly on a daily basis. That's very important.
Thanks so much. I'll now move to the audience. If there are any questions, please. Yes, we've got a question.
Thank you, Governor, and the team for a very good presentation. Good morning, everyone. It's very good to see that the sector, the economic sector, financial sector, both have been improving well. So there are very good signs of it with a good trajectory. I don't want to go in details because the presentation from the governor was very, very good. I have minor comment on the liquidity, particularly within the microfinance institutions. We know this sector involves a lot of citizens, and
maybe, Minister, it would be good for people to know your portfolio as you start talking of the microfinance institutions. Thank you.
So my name is Syriac Haradimana. I'm the State Minister in charge of socio-economic development in Minalok. So that's why I'm interested in the microfinance institutions. So it's not a question as such because it's clearly mentioned by the governor that measures are being taken to ensure the liquidity levels are kept at the required levels. But it involves all of us that are involved in the sector to ensure that the management of the scheme is well taken care of, because it has huge impacts on the economy of the country. Maybe moving forward, I'll be happy to hear what 1-2 measures that are being put in place to ensure this sector is well taken care of, because if not well done, it may have a huge impact on the not only the move of the economy, but also we need to ensure citizens continue to have trust in these microfinance institutions, because we are calling all the citizens to ensure, you know, not only access but use of financial services. And we know this is the main channel through which we can have our citizens having access in the usage of financial sector. Maybe the second quick comment is about the insurance, the motor vehicle insurance. It's good to see that there's poor performance just because of loss and the other tasks that have been mentioned. For some of us who have been having access to the demands from the insurers, they continue coming with the demands, and we know how much is being paid in the sector. We may not want to have details, but it's not clear why this sector is not performing well, yet every one of us is really member to the sector. And if it is not working well, I think we have to go deep in details to see what is really happening. I showed the poor risks management, poor credit analysis, and as the whole, there were the 3 things that were mentioned, but I think for this particular aspect, we would need to see, you know, measures put in place to ensure people are not playing around the businesses, particularly if there is a big demand in the sector, yet it's not well managed. We need to make sure those who are the players in the sector are really being monitored to ensure those things do not happen again. Then thank you for the agriculture sector. I'm with the Minister of Agriculture, but because we also have many people in the agriculture sector, it may be good to put in place also, you know, what do we need to do more, because the performance at which the agriculture sector is, I may leave to the Minister of State Agriculture to mention it, but again, there are many other aspects that we may put in place to ensure the sector keeps growing, because it involves many citizens, although being many in the agriculture sector doesn't mean really they are the players just by name, but also we need to ensure those who are in the agriculture sector, they are the real players in the agriculture sector without mentioning them by name only. Thank you very much, Governor. Again, I really appreciate it. It's a very good presentation and gives hope for us moving forward. Thank you very much.
Thanks so much for the question. I think it's probably better to take a few questions and then come back to the panel. So if there are any more questions or comments, I'll take the first round and then come back to the House again. Nagira ngo menyeshe abafite ibibazo mu Kinyarwanda namwe mushobora kubaza ibibazo na ushobora kubaza ikibazo mu kinyarwanda. Thanks so much. Okay, cool. But yeah, we've got a question here. Thank you.
Thank you, Governor and the team, for the good work you've presented to us. My name is Michael Waingana from Business Continental Plan, a consulting business company based here in Kigali. Through you, Mr. Governor, I'm asking the economy, the chief economist. We just seen a growing demand, quite an appetite for the treasury bills and bonds, and people are showing interest to lead investment into these new instruments. What the relationship with that, with the credit to the private sector? Thank you.
Thanks so much for the question. Any other question before I turn to the panel?
Yeah, thank you very much, Governor. On part of insurance, you said that motor vehicle is a driver to the losses of insurance companies. This year, there have been a lot of increment on the premium.
Chairman, maybe for the benefit of the audience, would request whoever takes the microphone to introduce themselves. Thank you.
My name is Robert Bafakulera, the chairman of Private Sector Federation. So I was just commenting on the vehicle insurance. This year there was a lot of increment, almost to 75% premium on vehicles. When you look at the vehicles, there are vehicles which are doing the services in the country. There are vehicles which are doing the services outside the country. Those carrying cargo from the port to Rwanda. From the past years, we are losing a lot of foreign currency because we are using trucks from neighboring countries. This year, late last year, we had a lot of problems in terms of transportation of cargo from the Sam to Rwanda. Because of lack of this kind of services in Rwanda, we lose a lot of foreign currency, and it causes, of course, it contributes to trade imbalance. I would suggest that the policy on increment of the premium on vehicles should be should consider this kind of issue, the transport from foreign country and local transport. We would like to encourage private sector people to buy more trucks to reduce on loss of foreign currency to other countries. And if there is an increment in this kind of thing, premium on trucks, it will discourage further the local people to invest in the transport of cargo from foreign countries. Thank you.
Thanks so much. I think we'll now go back to the panel and then come back to the House later on. This is a reminder that this event is being streamed live. If you have colleagues who want to follow, who are not here, you can let them know on YouTube as well as Twitter. Thanks so much. The floor is back to the panel. Thank you.
Yeah, thank you. We'll share the answers, so I request the Deputy Governor maybe make a comment on what's being done to ensure that the microfinance institutions are well managed and the citizens don't lose confidence in them. Of course, the one from Bayingana was directed to the Chief Economist directly. Now, on the insurance, I'll just make a few comments, and I'll, of course, invite the insurance CEOs that are here, including the chairman of the association ourselves, to make a comment. I think the challenge or the question from the minister is why is this sector mismanaged and therefore it ends up making losses. I think I said it in my presentation. We've seen challenges and issues of price undercutting, issues of capacities in risk pricing. And we've had many changes in the sector. We've had CEOs losing their jobs because of that. So there have been a lot of changes. But the reality is this is a young sector in our economy, and therefore we recognize that it still has challenges in terms of skills, but I think what's important was just the practices that were negative and therefore failing the institutions themselves. So what we are happy of today is that the current team of CEOs that are here maybe have agreed to stop the price wars. And that doesn't mean they are forming a cartel, because that we are interested in avoiding that as a regulator. But at least we avoid the negative price wars they're involved in. So going forward, we expect to see improvements here. I think the other important thing is that we had issues with, in terms of the capacities, really determining the pricing or the risks. That's why we had to hire experts way back in 2014 to try and support the industry in terms of trying to price the risk they're taking on motor vehicles, because that was the biggest challenge we had then. And that was the basis of the changes that happened during the course of this year. And going forward, we've required every insurance company individually, not necessarily as an association, to be showing to us their pricing mechanism and to be hiring actuarial services that will help them to price the risk they'll be taking. So we put in place requirements that will help to improve the professionalism in the sector in general. And to Robert, Chairman of the Private Association, Federation, again, the insurers will confirm, I think the insurance outside Rwanda is more expensive than insurance in Rwanda, I think. So saying that increasing price will make us less competitive, I don't think that would be an issue really. I think there are many other factors that are affecting or that are hindering investment by Rwandans in this international transport. I think insurance will be really the least. And most of them, as you know, I don't know, again, the insurers will come back to this. They're supposed to be using the trans-border insurance companies under the COMESA yellow card. So I don't think it will really be a problem that any increase in insurance to cover the risk will negatively impact on the investment by private sector into transport across the borders. But I invite the insurance companies to come back to that. So, Deputy Governor.
Thank you, Governor. Thank the Honorable Minister for the question, or the set of questions. Yes, the microfinance institutions sector is a key sector, and especially the Umurenge SACCOs that form the biggest part of this subsector. And it's important for financial inclusion in terms of the proximity they offer to the citizens, because these are actually their institutions. What could be done to make sure really they continue to be the success they have been is really to reinforce this ownership by the citizens. I stress this because of the other issues I will try to elaborate on, but really they are hinged on that ownership or lack of it or abuse of it. One, we would wish to see more mobilization for deposits really taking place. We've observed that they're kind of growing, but at some point they're like really in terms of numbers, in terms of coverage, it's not increasing as it used to increase in the past. And that's something the citizens mobilized by the local government and other players, but only, especially the SACCO's leadership, the board of directors of those SACCOs and the management team of those SACCOs would wish to see more proactiveness in terms of mobilizing members. We would wish to see more responsible borrowing and lending. We are lucky or happy to see the trend declining for the NPLs in that subsector, but 8 point something is still very high. And we would wish to see more health in that. And to address this, there is need for really cracking down this bad culture of really defaulting on loans. People borrowing, there might be also malpractices in some SACCOs, whereby the underwriting of the loans is not really following the book of procedures. There might also be some other things chipping in, but really ensuring that people are responsible really in paying back the loans. And this is something that all Rwandans, we would really wish to really cultivate and support more. It's really very, very bad, and it's sad to really borrow from these entities and you don't really care about paying back this money. It's a bad thing, and we would really, by all means, wish to see this cracked down. There is a number of stakeholders coming in this picture. Of course, the institutions themselves, the members of the SACCOs, who are the defaulters in this case, and the supporting institutions like the judicial system around, and so on and so forth, to help enforce the culture of paying back the loans. That's really something we would wish really to be reinforced. As the central bank, we regulate and supervise these institutions. We have inspectors residing in all our branches across the country, really working hard to make sure these institutions are stable. So far, we've managed, but we would wish really to see more support from those, the ecosystem. There is also this issue of governance, especially the governing, the elected organs of the SACCOs, who have been observing the issue of limited capacity in terms of really understanding the banking business, because these are really banks, and making sure the internal rules, procedures are really adhered to, the committees are performing the way they should perform, and really being many scattered across the country, it has been really a challenge in terms of really having the capacity to sustain proper structures and teams that are capable of taking them to the next level. Some entities are also in geographical areas whereby there are not really enough economic activity to sustain the business, and there is a case, really a strong case for the consolidation of these entities. So we've been working on this project for quite some time. We are heading there, but we are not yet really there. So the automation of these institutions and the consolidation, that's a project that has been ongoing. And we hope once this is really completed, it will afford these institutions to really improve their governance a lot. And by improving the governance, you also improve the health of the business. That's what I would say about the microfinance institutions in general, but also the Sako Umurenge in particular. And we thank the ministry and the local government for the work you do. It's always like a catch. We work with you to make sure these institutions are well behaved and performed, yet you don't have really to kind of interfere because they are businesses in themselves. So striking a balance there, it's not always easy, but we have to do all that it takes really to make sure we support them. And I will also, as I end, stress the issue of really enhancing the mobilization. It's kind of, there is sluggish kind of trend in the uptake of this, and we need to understand why. We've been working on really trying to understand, doing a diagnostic of this sector beyond what we do normally as a regulator. And I hope we'll issue a report in due course so that we can share with all the policymakers to see what we can do to sustain and really help these institutions further, because they are playing a good role in the inclusive development that the country has committed to deliver. Thank you.
Thank you, Governor. The link between investment in government securities and credit private sector, I will just use numbers as presented by the Governor. We saw that deposit in the banking system increased by around 13%. So this means banks in Rwanda have enough liquidity to continue financing the economy. But on the other side, we've seen people investing in treasury bills and the bond. But this means definitely that the development we are seeing in the market is offering different opportunities to people with liquidity to save their money. That's very, very important. Second, interest rate on treasury bills. It was also clear in the PowerPoint presentation, 8%, 7% today, which is lower than the lending rate. So definitely, even if banks are investing in government securities, it's after financing the economy. They have a lot of liquidity, and they also need to diversify the investment of their money. That's one. So when you need to analyze the link between investment in government securities and the credit to private sector by commercial banks, you need just to check the increase in the deposit rates and compare lending rates and interest rate on the government securities. That's one. Second, and finally, I think this development we are seeing in capital markets will be in the future a good opportunity to continue financing the private sector. We need to mobilize long-term financial resources, and this will come from the financial market, not necessarily from commercial banks. So by investing in government securities, one, the country is achieving its objective of mobilizing savings, but second, this is contributing to develop the capital market, and in future we'll have
corporate bond issued in the market so that we really have an alternative source of financing in private sector in addition to what banks have been doing.
Yeah, from the insurance sector, any comments?
Cool. I'll give you mine.
Thank you, Governor. My name is Gaudens Kanamugire. I'm the chairman of the Association of Private Insurers. There have been a number of questions raised about motor insurance, and I would like to bring some clarification. Yes, the insurance sector has gone through many challenges over the last 5 years, and there have been a lot of comments about what has been going on. And what I would like to say is that there have been many challenges that the private insurance sector has been going on over the last 5 years, and mostly driven by motor insurance. Motor insurance, as you said, accounts for more than 50% of our books. And we have seen poor performance in the industry, mainly driven by motor insurance. This poor performance is mainly driven by internal challenges. They are driven by challenges internally from insurance companies. You talked about price wars, and this has been a big issue in the industry. But there have been a number of measures which have been taken. We came up with a scientific study which showed what would be a minimum price for a motor insurance owner, and this came up from January 2017. There are also external challenges, which I can mention few of them. We have a number of fraud going on in the market, which we have devised strategies to overcome these challenges. We also have challenges in laws and regulation, whereby we are facing huge compensation in terms of bodily injuries, but we are working together with the stakeholders, regulators, to see how we can curb this. So what we can assure you is that measures have been taken. We are working on, and we hope in near future the performance will go increasing. There is a comment from the chairman of Private Sector Federation, who said that the increase of premium, motor premium rates might impact negatively the transport sector. I would like to comment on that, saying that not necessarily the component of insurance in the pricing of transport is not really very big, and if you compare with the region, the price in Rwanda are more or less equivalent to what is being charged in the region. But however, on the side of compensation, the compensation in Rwanda is much huge compared to what our counterparts in East Africa do. Their compensation is capped at a given level, yet in Rwanda we have unlimited liability. And this, though we are having almost same level of premium rates, in East Africa, in neighboring countries, the level of compensation is low compared to here, and this makes us less competitive. So buying insurance thinking that the increase of motor premium will impact or will probably lead transporters disinvesting in transport, I don't think it is a logical conclusion. So, in brief, we can assure you that the sector is going to behave better. And what I can request the public is that thinking of buying cheaper insurance might not necessarily be a good decision, because it might lead to dragging the sector into poor performance, though it might be a good deal. Thank you, Governor.
Yeah, so Samuel, I think we can, maybe before we go to the second round of, yeah, thank you, the Minister. I was going to comment on what the Minister of State's Minoloka said in agriculture, but happy that the Minister is there and will maybe answer what he has, what can be done to continue growing agriculture.
Yes. Murakoze, nitwa Fulgence Nsengiyumva, umunyamabanga wa leta ushinzwe ubuhinzi muri Minisiteri y'Ubuhinzi n'Ubworozi. Nagira ngo nanjye nshimire ikiganiro Governor yaduhaye kigaragaza uko ubukungu bw'igihugu buhagaze ndetse n'uruhare rw'ubuhinzi mu bukungu bw'u Rwanda. Uko byagaragaye nuko ubuhinzi buhagaze neza, ndetse tukaba tutekereza ko no muri rihinga turangije, isizone turangije, umusaruro duteganya kuzaba mwiza cyane. Ubu tukaba rero dufite ingamba zo gukomeza ibyo twakoze byose, kandi ntabwo ari uruhare rwa Minisiteri y'Ubuhinzi n'Ubworozi gusa. Tuzi ko harimo abantu benshi mu buhinzi babigiramo uruhare. Icyo dukora muri Minisiteri ahubwo ni ukugerageza kubahuza kugira ngo koko ibikorwa bakora bituma ubuhinzi bukomeza gutera imbere. Nagira ngo mvuge ibintu bibiri kubyerekeranye n'ubuhinzi. Ikigo cya statistique kitugaragariza ko mu bantu bakora mu gihugu 70% hafi bari mu buhinzi, ariko abo bantu ko tubazi ni abantu babikora mbega byo kwirwanaho, ntabwo abenshi bize ndetse ntabwo bize iby'ubuhinzi, ariko muri bo nibo batuma 90% by'ibiribwa mu gihugu biboneka. Ni ukuvuga rero ngo muri icyo cyiciro cy'ubukungu bw'igihugu harimo amahirwe menshi. Tuvuga ko ubundi ubuhinzi ntabwo bwiyongera kubera ko imvura yaguye, ni ibikorerwamo. Tukaba rero ubu tuvuga ngo ese ubuhinzi twabukomeza gute kugira ngo bukomeze bugire icyo gipimo cyiza. Tubona ari uguhindura imikorere yabwo, cyane cyane guhindura ababukora. Ari nayo mpamvu twafashe ingamba zo gushyiramo urubyiruko. Ubu twatangiriye ku bana barangije kaminuza mu by'ubuhinzi, dutuma begera abahinzi, tubyita exposure, kugira ngo tubahe iyo opportunité kugira ngo begere abahinzi bamenye ibyo uwo mwuga wabo, ariko nabo babafashe kongera umusaruro. Tukaba dutekereza ko wenda mu myaka 3 n'itanu ubuhinzi bushobora guhinduka, ariko ntabwo bo bonyine bazatwara uwo mutwaro kugira ngo ubuhinzi buhinduke. Turasaba umuntu wese ubona ubukungu bw'igihugu ubuhinzi bufitemo uruhare rukomeye kuba yafasha, kubera ko ubuhinzi buteye imbere ni no guteza imbere business dukora. Ari byo Governor yatweretse nyirango ubuhinzi it is the poor child of bank loans. Urabona ngira ngo bare niba ari 1.5% ibintu nk'ibyo ugereranije n'izindi sectors. Kudashyiramo rero amafaranga, ngiye kuvuga ngo ndi no kwihima kugira ngo iyo terme ntabwo ari yo, ariko ubundi kugira ngo tubuteze imbere rwose amahirwe arahari. Twafashe n'ingamba zo kugira ngo dukoresha amazi aho ari, imvura yagwa itagwa, kubera ko ubuhinzi ntibukoreshwa n'imvura, bukoreshwa n'amazi cyokora. Aho amazi ari rero tuyakoresha biriya bya irrigation, ku buryo gushoramo imari bishoboka. Nitugira tugashyiramo urubyiruko, abantu bato bakingutse mu mutwe, ababyize bakabyigisha n'abandi, twumva rwose muri sekiteri y'ubuhinzi dushobora gukomeza kugira kiriya gipimo gitera imbere. Ariko ntabwo ari minisiteri y'ubuhinzi n'ubworozi izabikora, ni twese, ari za minisiteri dufatanya, ari private sector, abantu bose babigiramo uruhare, cyane cyane za banki. Niba tuvuga ko tugiye gushyiramo abantu bagiye kubikora babizi, tukaba tubona n'ubundi byakorwaga kandi bigakorwa n'abatabizi, twumva rwose harimo amahirwe yo gushoramo imari, noneho tugakomeza biriya bipimo bizamuka bigahora biri hejuru. Ndabashimiye, murakoze.
Nakoze, Honorable Minister. Just a brief. Okay, cool. Yeah, murakoze cyane. Cool. Thank you. Thanks so much. So we are now taking questions for the second round. So if you have questions, you can let us know, and then we'll reach out to you. Thank you.
Richard Newfarmer from the International Growth Center. Thank you very much, Governor, for such a lucid presentation. I was particularly interested to see the very favorable outlook for 2018, jump up to 6.5% of GDP. Of course, a key element of that will be export growth, as in the report, I think, and in your remarks, outlined quite clearly the importance of traditional exports, non-traditional exports, informal exports. I wondered, however, about services exports. Services now account for maybe roughly 50% of foreign exchange earnings, tourism and so forth. They also feed back into the economy in an interesting way. I was interested to see that the hotel sector, for example, had a very high level of NPLs. I wondered if maybe the team could tell us a little bit about the outlook for 2018 for tourism and other services exports, and how that may play back through the financial system.
Thank you. Any more questions? Abandi bafite ibibazo? Yeah, there is someone on that side.
Yes, my name is Fabrice Munyakazi. I'm from Banque Populaire, and my question was really on the side of the financial stability, and I wanted maybe the panel's view of really what they think the regulatory, some of these new regulatory standards that we are going on, such as Basel III, for example. I think that will cause, obviously, in the banking sector, the cost of funding and also the net interest income base to go down. So I think, what are the views maybe of bank profitability, return on equity, and also do they think that it's still sustainable to assume that as a result of these regulatory additional regulatory costs, that we should expect lending rates to continue to go down?
Thanks so much. Yeah, there is someone else again at the back.
My name is Olivier Mugabonake. I'm the Managing Director of AD Finance. My question goes to the Vice Governor. She talked about the challenges they were facing with the Umurenge SACCOs, among other things, because of the automation. I know that 3 years ago or so, the automation program started. I know that it's a big challenge of automating 400 and plus SACCOs but there are out here in the country solutions to do that. So my question is, what is the challenge that makes that the project takes more than 3 years to be delivered? Thank you.
Thanks so much. There is a question.
My names are Agnes Nyiranghira. I'm the CEO of Business Continuity Plan Ltd. Mine is more of comment, and as we can see, a lot of financial institutions coming out with beautiful products. We want to believe that all those products will be scaled to countrywide, so that we are able to do business in various ways. Thank you very much.
Thanks so much. There's a question on that side as well. Yeah.
Murakoze. Nitwa Patrick Rurangwa. Mfite nyakubahwa Governor, turabashimira cyane ko kuri presentation mwakoze.
N'abarogoye mu ijambo mwatubwiraho muturutse?
Turutse muri RG Forex Bureau Limited. Nyakubahwa Governor, turabashimira cyane kuko mwatangiye gahunda yo kudakoresha kashe, abantu tukishyurana dukoreshe uburyo buri electronique. Ariko kugeza ubu ngubu muri banki nyinshi turacyahura n'ibibazo byinshi bitandukanye. Navuga icyambere nk'ibintu bitwa value date cyangwa se mu Gifaransa date valeur. Nyakubahwa Governor, banki nyinshi zangaha iyo ufite amafaranga yawe kuri uwo munsi ugahura n'undi muntu ugashaka kumwishyura, banki nyinshi bacaginga value date, ukajya gusanga ya mafaranga yawe babaze yuko baguhayemo loan, baguhayemo overdraft, kandi ari mu mafaranga yawe ko bitewe nuko amafaranga atararangiza muri banki amasaha 48. Akabazo ka kabiri mfite nuko mu byukuri usanga mu Rwanda ubu ngubu twatangiye guteza imbere ibijyanye n'inganda, ariko kugeza ubu ngubu usanga hagati ya banki z'ubucuruzi n'izo nganda turizimo guteza imbere ugasanga harimo ikinyuranyo, bamwe bakora ibindi abandi bagakora ibindi. Nabaha nk'urugero, nge mfite business zimwe na zimwe nkorera mu bihugu bimwe na bimwe byanga muri aka karere, ariko dutinya yuko twarazayo amafaranga, kuko yarajijeyo ushobora kuzasanga ejo mu gitondo banki yimutse. Ariko iyo yagejeje mu Rwanda muri iyi minsi banki nyinshi iyo yakuye mu kindi gihugu kayazana ari cash, usanga izo banki zimwe na zimwe zicaginga amafaranga arenza yo twunguka. Ushobora gusanga banki zimwe ni 1%, 0.5% n'ibindi nk'ibyo ngibyo. Tukaba tubasaba rero nyakubahwa Governor, niba bishoboka yuko mwadufasha mugakorana na banki, kuko izo charges rimwe na rimwe biba bitugoye kuba twabasha kuzishyura. Murakoze.
Murakoze cyane. If you may allow, we'll take 2 more questions and then come back. Yes, there is a question on that side. Okay, go on.
Murakoze. Nitwa Jessica Ingabire, nkandi umunyeshuri muri NELAC. Ikibazo mfite cyerekeranye no kuri cryptocurrency, nifuzaga kumenya uko ikora ndetse niba mu Rwanda yemewe. Murakoze.
Murakoze cyane. There is one more question that side and then we'll come back to the panel.
Thank you, Governor, for the good presentation. My name is Innocent Africa, coming from KCB, Rwanda. Looking at the small booklet on page 43, where we talk about loan and deposit, I was doing a small stress test, and the best practice is that the bank should lend 80% and remain with 20% of its deposit. But when I was doing a small stress test on this number, I found that since 2014, we never have had loan to deposit ratio of 80%. Now, my question is it still 80% a good indicator on loan to deposit ratio as a best practice?
Your stress test showed that we are higher than 80% or lower than 80%?
We are higher than 80%. Yeah. The second question is about the industry of manufacturing. As Rwanda is encouraging the made in Rwanda, and when you look at the non-performing loan, this industry is being affected in terms of risk. What's the measure in place or support from the government to ensure that this sector is not going into non-performing loan? Thank you.
Thanks so much. Governor, if you will allow, we'll come back to the panel to answer the questions. Thank you.
Yeah, sure. Yeah, okay. I think we will again try to share the questions. There's one that was directed to the Deputy Governor, then the question from Fabrice. I'll leave it to ED FSD together with the question of the 80% deposit loan ratio. So now the question of new farmer. Sorry, it takes time to get numbers for the service sector exports. Like we tried really to finalize numbers for tourism before we came for this presentation, but there was still work going on between RDB, Institute of Statistics, and our Statistics Department. So we didn't want to start presenting numbers that are not final. So, but yes, at the end of the day, when we are doing our balance of payment table in general, we have the service exports and it has been doing well. So we are not able to have the numbers here, though it shows, so far what we have, the preliminary numbers we had showed, I think it was around 5% or so growth in tourism exports. In fact, in service exports, we also do, I think it's part of the service exports, the peacekeeping. It's like we're exporting a service, and this is today is a big earn of foreign exchange. So I think by the end of June, that's when we have the final. In fact, by end of March, we should have the final numbers and the table for balance of payment showing all the components there. So you asked about the projections for tourism. I don't know if we have anybody from RDB here. But I think during the discussions we had, they indicated expected positive growth still this year. But we haven't finalized. As we do finalize the best, then we'll be able to get the projected growth going forward. On the hotel sector, the issue of NPLs, I think there's been a lot of investment in hotels going forward as we are, as a strategy of the government to position Rwanda as a conference hub. There was encouragement to invest in tourism, I mean in hotel industry. And I think so the investment in hotel industry has sort of surpassed the growth of the arrivals going forward. When you look at the numbers, I think today we have the capacity hotel rooms of about 9,700, and the arrivals today at around 5,400. So there's still a big gap between the international arrivals and the available hotel rooms. So of course that shows the stress, structure challenge on the hotel industry to meet their ends. So when you look at the different hotels across the sector, we see some have already reached the tipping point already in sort of writing off, but there are others that are still struggling. So it's one area that we think we should be engaging with the responsible authorities to see. I think there's a lot being done really by the government and RDB in general to attract more conferences here that will support this excess capacity of hotel rooms. But we think when you look at the numbers, maybe we don't expect big challenges maybe for this year. But if something big is not done in the medium term, I think we'll have challenges. Most of, even the other hotels will start having challenges. So there's that mismatch between the hotel rooms and the arrivals. I think for the circle automation, that's to the Deputy Governor. Then I think on the lady from RTB was just a comment on, I don't know, maybe the banking industry was saying there are good products coming up. So when do we see scaling up of these good products? I request one of the CEOs here, one can take advantage in it to advertise their products and inform the public when the scaling up is happening, but also have Morris, the chair of RBA, maybe can speak on behalf of the others. I think you also, I will request you again to speak on the issues raised by Patrick, on the issues of value debt, but I have to inform Patrick and the others that this is an issue that we've been discussing with the banking industry ourselves as we are trying to promote this cashless. Of course, the issue of instant payments and instant recognition of value received is very key, because as we are promoting electronic payments, if somebody does an electronic transfer of money from one account to another, when money hits the receiver's account, shouldn't take another hours or so for the receiver to start using the money, because that's why we are driving electronic means anyway. It's to cut the delays in payments. And so I would say we are still engaging with the industry, but I would want to hear from the financial institution themselves on this issue. Again, I think the issue raised by Patrick again on resources earned from outside Rwanda and banked into our banks, I think that the explanation we've got from the banks is that you deposit the money in one border town in the morning and you expect to have it and use it in Kigali a few hours later. So it's like you're not using us as a bank, but maybe as just a transport company for your foreign exchange, and therefore we have to charge sort of a fee for that. We're still engaging with the banks on this as well, but I think they can say more. They can say more on this. I think if it's not something that you deposit now and get immediately, if something you deposit and use it a few days later, it doesn't really attract these charges. But I want to hear from the banks as well on this. Cryptocurrency. What is it, and is it acceptable in Rwanda? I think this is an interesting question. We've had this cryptocurrency phenomena really sort of a hot cake across the world. Cryptocurrency is, how do I explain it? It's maybe I explain it using, I wouldn't want to just sound negative as such, but what I would say, it's not legal tender. So those that have it, they keep it as value between the miners. Maybe Peace will help me to explain this as well. I know she's part of, as financial stability, responsible for payment systems as well. But I think what I want to stress here is this is an innovation that has come up, and it's spreading across the world, but there's still challenges of it's a means of payment that is not, or value that is not regulated by any regulator. It's really transacted based on confidence among the owners or the miners of this currency, because it's produced by, they call it mining using equations, and so it's like it doesn't have really an intrinsic value, and it's not. For example, when we talk of a legal tender, the the currency issued by the Central Bank of Rwanda is backed by the state. If anybody holding any currency issued by the Central Bank of Rwanda as a legal tender, and by the way, this legal tender status is given by presidential order, in that case, the state is a liability that a state has. If you have any problem with this currency, the state will take responsibility for that. But with this cryptocurrency, there's no underlying base or support for whoever owns this money, and you can't use it to buy goods and services as you use the legal tender that we have today. So there's still a lot of studies and research going on how it's a good innovation, but it's still risky because of lack of regulation, and there's a lot of gray area around it. So it's the challenges of how you avoid it being used for money laundering and or financing terrorism, as we say. So because of that, in Rwanda, we haven't accepted it as any means of payment in our countries because we don't regulate it as a central bank. And so if you invest in it, you won't have any support from any institution that will guarantee you that your value, wherever you want it, you'll be able to use it for transactions of any kind. So we advise people to avoid investing in it today. We've put up a team at the national bank level that is trying to study more around this. We are working with the other stakeholders at national level. We are putting up a national task force again to try and see how we position ourselves vis-a-vis these new technologies that are coming up. But for now, we really advise people to avoid. If you invest it, I would say you are doing it at your own risk, as it's been hot money in the West. As you remember, some time back, it had gone to about the value, what we call Bitcoin, almost gained value of $20,000, and in a few days had gone back to below 10,000. So it's a risk that is really you might be difficult to assess today. But I think I request please to say more on that as well. Then risks in the industry. I don't know if we have anybody from Minicom here or any agents of Minicom. Anyway, to me, I think what we see in the presentation where industry has gone, the non-performing loans for industry have gone up. As I said, it was mainly linked to two factories. And when you look at the causes of these factories going into NPLs, it's not because of structural issues that are linked to the industry, it's because of mismanagement of this particular factory. So I wouldn't want to say it's a concern that it's a sector concern. It's an isolated issue linked to these industries, mainly on the business model and the management of their business affairs that led them to going into non-performing loans. So please.
Thank you, Governor. So on the issue of Basel III, the question I think that was raised by Fabrice, I think it really re-emphasizes what the Governor spoke about earlier in his presentation, indicating the heavy reliance on of our banks on loans as a source of income, and in my view, I think that's what was really causing the concern in terms of potential impact on return on equity and long-term profitability of the banks. But probably just to calm everybody's fears, I think we've been doing this Basel II, Basel III parallel run for over a year. I think a year and a half before it actually became effective this year. So for most of the banks, actually for all of the banks, from the numbers that we have seen, capital adequacy is still sound and stable for all the banks. For those that were borderline insolvent under Basel III. We've seen capital injections coming in throughout the past year, 2017, just to strengthen the capital base of the banks. So in terms of concerns in the long term on long-term profitability, I think it's just a re-emphasis of diversifying the sources of income of the banks, building on the non-funded income, working on cost rationalization measures to just improve profitability of the banks going forward. I think there was another issue that was raised on the question that was raised on the loan-to-deposit ratio. What you see in there also is the alternative sources of financing of the banks besides deposits. So you'll see lines of credit that the banks have. They'll get financing from local and also other, largely actually international institutions, the likes of IFC, DEG, etc., which are lines of credit that they actually get for on lending purposes, and that's why probably when you do the quick computation, you don't come up with the 80% ratio that you're looking for. I think on cryptocurrencies, maybe Governor, there's not too much to add, but just to re-emphasize that that's the view, the position of the central bank as it is today, and to re-emphasize that this is an area that we continue to explore. Our concerns today being with cryptocurrencies that are privately issued. Governor said, there's really hardly any value, underlying value that supports this, these currencies. There's currently no legal protections for issuers or users of the currencies locally in Rwanda. But this is, I would say, digital currencies is sort of, it's a type of digital money. So that does not say that in the future, at a certain time, depending on the circumstances that will prevail, that the central bank could potentially issue a digital currency of its own. The revised central bank law that we have now does give us the option to be able to issue currency in both paper, coin form, or any other form that may be deemed necessary. But for today, and this is something that we're working on, and in a few weeks we should be issuing a guidance to the market in terms of how to deal with or interact with cryptocurrencies or virtual currencies as a broader term. Our concern really being in terms of anti-money laundering. I think when we're doing research in this area, we're looking at some documentation that was estimating that about 80% of the transactions that are actually conducted using these virtual currencies are questionable type of transactions. So this is an area that we would want to tread with care, but I can commit that we will be issuing a guidance to the market in the weeks that come.
Yes,
thank you. And for those who need to know more, there is a good article in the Rwandan Banker on page 16 also. There was a question on this automation of Umurenge circles. Indeed, it's unfortunate that this project has delayed to come to fruition. Of course, it's a complex operation. Having these 416 institutions that are manual kind of managed, this involves two exercises. One is to clean the data, make it ready for migration, and the other one is to develop a technical solution that can integrate them and be having properties that are going to allow all the banking transactions, including eventually being participant into the RIPS. So it has encountered a number of problems in the development of the technical solution, but now measures have been taken to bring the project back on track, and we hope that by end of this year we'll be having something coming out of of that. So it's unfortunate. We are sorry as institutions really involved in the implementation, but it can happen with any project. It's always possible to have snacks here and there. Thank you.
Governor, I think you'd mentioned that a question to the CEOs of the banks.
Yes,
sure. If Maurice,
Rwanda.
the head of Rwanda's Bankers Association.
Thank you very much, Governor, for a good presentation this morning. And I would like to just make very quick comments about the 2 points raised by speakers earlier on. The first one about the fact that banks have gone out there with very innovative solutions to try and solve day-to-day financial service problems. I think one, I would be unfair if I didn't thank her for recognizing that fact, that banks are making all efforts to ensure that financial inclusion, convenience of access to financial service becomes a reality. And we are in common understanding in the sector that this is something that we all have to pursue, both as individual banks and as an industry. So you're spot on that it is important that we scale up the many solutions that banks have already implemented or have already made possible for people to be able to open accounts, make transfers, save and access credit in the most convenient of channels such as mobile banking, internet banking, and so on and so forth. So the big challenge there is, of course, is for all of us to engage with the public to ensure that they are well educated in the benefits of these solutions and how to make sure that they take the best advantage of them. One, to improve their own use of these services, but to also ensure that whatever risks, and particularly those risks related to cybersecurity, are also well taken care of. So banks are also working together to ensure that we have adequate programs for public awareness and education to ensure that there is faster uptake and scale up of the solutions. The second point, which is about validating, there's two elements to it. I think the first one, the governor hit it on the head. I think the more important point, though, is that banks currently are working towards ensuring that we achieve instant payment solutions within the ordinary clearing system that we have in the banking sector. So many people would be aware of what in other parts of the region is called real-time gross settlement under the clearinghouse, and that is currently already available in Rwanda. So to the extent that one requires to make a non-cash, and I stress that, a non-cash transfer from one bank to another, today it is possible to achieve that within the same day without incurring necessary overdraft costs for the intraday debit that might arise if those payments were treated as uncleared. We are also in discussion currently about how to then also achieve faster clearing of checks, and this week the banking sector will be implementing one of the solutions towards achieving this, which is called check truncation, which we hope that in the next couple of weeks that this is going to be implemented fully. And the process is geared towards making sure that the payment and settlement process in the banking sector is made easier to achieve instant payment environment. But having said that, I think the other important point to mention is that, of course, the nature of the transaction usually will determine the kind of value dating that may be given to it, by banks. So if you're looking at a cash payment deposited at one part of the corner of the country, to be made available in another part of the country, depending on the nature of the transaction, and particularly when it is foreign currency. You know, there's always a cost in remitting and moving physical cash from one corner to the other. Hence the reason that banks may be inclined to allow a day of transmission rather than that becoming available on an instant basis. But non-cash payments, we are all in agreement, and we are working towards making sure that we achieve an instant payments in our banking environment. Thank you.
Thanks so much. Governor, we have a few minutes for 2 questions, so if you... Yeah. So I'll take 2 questions before we come to the end of this phase. Any quick question? We have a question in the corner. Lady in the corner.
Thank you so much. Nitwa Isimbi Shemusa, nkabandi young economist wa GIZ muri Minecofine. Wenda ikibazo ngiye kubaza ntabwo kiri direct kuri BNR ariko ni kiri related n'ubundi. Urebye mu bushize muri presentation y'ubushize mwari mwerekanye ko hagiye gucika made in Rwanda, haza muri kwinkarejinga made in Rwanda bakavanaho imyenda ya cagwa, ariko ubu urebye usanga imyenda n'ubundi iri ku isoko yaba yo twambara imyinshi ari made in China. Ukibaza se ni imyenda koko yaciwe made in Rwanda dufite capacity yo kuyikora se niba tutayifite n'ubundi usanga caguwa arizo zari zendutse ugereranyije n'imyenda ya made in China kandi yo inanoroshye ari idafite itakomeye ugereranyije niyo abaturage bari bafodinga kugura. Nibaza nanone icyo nka ministeri ibishinzwe iri kubikoraho ugereranyije tubona baravuga ngo twambare made in Rwanda ugasanga barabyinkarejinga, ariko usanga ababyinkarejinga bo batabikora. Ugasanga nanone imyumvire abantu bafite kuri made in Rwanda nago babibwira nyine abaturage, kandi ubundi ugasanga nabambara ya myenda ni babadamu n'ubundi bayidodeshaga. Mvuga ngo wenda hashidwaho uburyo abayobozi abantu babishishikariza abandi aribo bagira uruhare mu kubikora, bakaba banabye kugira ngo n'abaturage babyiyumvemo. Hakaba habaho n'umunsi nk'uko habaho umunsi wa siporo, hakabaho n'umunsi wo kwambara made in Rwanda kugira ngo n'ababikora ahubwo babone n'amasoko.
Murakoze ku gitekerezo. Let's have one more question and then I'll come back to the panel. You have a question. Okay. Pull it.
Yeah. I would start. My name is Muhimuz Mugisha Daniel. I'm the managing director of Mayfair Insurance Company. I'll start with just a suggestion on tourism. Tourism, which could have actually been mentioned in the service industry, in the booklet, and I didn't see it, and it's one of very promising and growing sectors early mentioned by others. I would also want to ask a question about microfinance. There is a recurring experience of non-performing loans in microfinance institutions, which is always or more or less above 5%, which is the benchmark and a good best practice worldwide. Yet in Rwanda, we have a very positive environment in terms of securing collaterals and even registering, compare especially with the region where lands, titles are very difficult to get and to control and even to register. But in Rwanda, it's very fast. Even selling out or recovering using the collateral has been facilitated and via RDB that could give some leverage or benefit in terms of improving the non-performing loans. Another aspect would be on the cash liquidity. Yes, there has been some over liquidity, I would say, as you presented, but the main activity of microfinance is not placing liquidity in financial institutions, but to lend, and basically, and more importantly, to traders, agriculture, and the other services that are actually contributing to the growth of the country, of the economy. So, what can you recommend then as a forward mechanism or strategy to help this sector, subsector, to be contributing much more significantly and have a very quality performance in terms of the management of the loan portfolio? Thank you.
Great, thanks so much for the question. Now I'll go back to the panel.
Yeah, I think the question from Isimbi, interesting, you are coming from the Ministry of Finance, and I want to maybe send your question to the Chief Economist of the Ministry of Finance. Unfortunately, I don't see anybody from Minicom here, because I think Minicom is responsible for the policy of promoting Made in Rwanda, but I know they work closely with the Ministry of Finance in this, and so I'll invite the Chief Economist of the Ministry of Finance to make a comment on that. And but I think the fact that you don't see many here putting on Made in Rwanda, I don't think the objective was to say everybody should put on Made in Rwanda. I think the objective was to say Rwandans should not put on rejects of other people. Yeah, so we should promote industry that produce new clothes, and we stop putting on rejects of other people in form of second hand. I think that was the objective behind that. So maybe the gap in between could have caused that influx of the Chinese clothes. But maybe Ronaldo wants to say something on that. So then on the question from Daniel, I don't think the fact that we have laws that make it easy for people to recover their securities would stop people going into non-performing loans, or would stop loans not being paid. I think what it helps, that can be confirmed by the banks whether it really works, is when the loan becomes non-performing, at the end of the day you can recover the security. But before you go into the security recovery, it has to go into the NPLs first. So what we report here is loans that have gone bad, that are non-performing loans, and normally the process of recovering the security to cover this non-performing loan starts after it has been recognized as an NPL. So it doesn't at all, whether it's easy, I don't know how easy it is, but that wouldn't at all stop the numbers of NPLs to show the trends they're showing. I think the other factors, the Deputy Governor earlier responding to the question from the Minister of State in Minalok, talked about the challenges in the microfinance institutions, what is being done or what can be done to improve on the performance of this subsector of the financial sector. That's when we can see the sector performing better and using more of their liquidity to finance projects than just keeping it in banks. But doesn't at all, what I want to say, the ease of disposing of security doesn't stop NPLs behaving the way they would behave. So, Donald?
Thank you, Governor.
I think maybe the first thing I will say is Made in Rwanda is not about clothes. Made in Rwanda is not about Chagua. Yeah, Made in Rwanda is a lot bigger than that, so I don't want people to actually reduce it to only the Chagua thing. Made in Rwanda is about making sure that we export a lot more, openness to, and that our industries become competitive. So we export a lot more. Of course, with exports will come a reduction of the imports, a substitution of some imports. Now, on the clothes, I think, Governor, you said it well. The idea was not that everybody in Rwanda will need to wear only clothes that were produced in Rwanda. You know? No, the idea was actually avoiding that people continue wearing Chagua. And on the other side, I think it's an issue of sequencing. How do you make sure that you encourage the local or regional textile and garment industry? So that was the main point. Of course, we could have said, okay, let's first produce the clothes and then we stop the import of the Chagua. But I don't think that would have been the right sequencing. The right sequencing is actually, you couldn't actually encourage I would say, the coming up of any regional industry in this textile and garments as long as you still add the Chagua. So that's why we started first by the first step reducing the import of Chagua, and then now we are working on encouraging production of textiles and garments from Rwanda.
Thank you. Thanks so much. I'll now hand over to the Governor for his closing remarks. But before I do, I'd like to remind you that we have 3 booklets. You have the Monetary Policy and Financial Stability Statement booklet. You have the Economic Review, and this is a collection of research papers from researchers at the National Bank of Rwanda, as well as other institutions. You have the Rwandan Banker, which is a magazine with different articles. Some of the issues covered in these publications have been questions. So for more answers, you can consult these publications. I would also like to remind you that we have a form. So if you could please fill that before you leave and leave it back so that we can get your thoughts about this event. Finally, I'd like to say that you can continue the conversation on Twitter and other social media platforms. If you have questions or you still want to engage on issues that were discussed today, the platforms are open. With that, thanks so much, and Governor, you can offer you.
Yeah, thank you, Samuel, and thanks for a job well done being our MC for this function. I have nothing much to add. I just want to thank everybody here, the honourable ministers, honourable members of parliament, the other government officials, the international organizations, the financial sector, and the other business people here with us. The objective of this session, normally, as we said from the beginning, is to inform the public of what is happening in our economy and help people to make informed decisions, informed economic decisions. This is part of our monetary policy, sort of an instrument of our monetary policy, and we hope the information we gave you, as I said, these booklets have much more information that we've been able to discuss with you here, and we encourage you to take time, read it, and understand what's happening. And as Samuel said, we're always available to engage with you on social media, and also available to engage with you from our premises in the central bank. But otherwise, I really thank you again for your time and for your engaging questions and comments, in fact, from some of you. Otherwise, we invite you for a cocktail as we conclude this. Thank you very much.
mushungura inyange watubaha impungure barambe muganga karuka muganga Jabana n'inganjo bihinga bikeye ntarambwe mu Rwanda bari icyagatinyirwe cyose maze wafosi nkaho umushumazi ntarambwe mu Rwanda Karame mushungura inyange